Time to Study by Arief Putra. You should know about the basic of accounting concepts. First is entity. What is the concepts? Types of entity and example. Second is going concerns. What is the concepts, the value, and assumptions? This was prepared by me, Arief Putra Rizal, and the program is Diploma in Hotel Management. The university is Innovative University College. Here we are going to be talking about the general overview. What is separate entity? Now, that is a very interesting question. Also known as the business entity concept, is an accounting principle that separates the business from its owners. This concept is applied to all types of businesses, including sole proprietorships, partnerships, and corporations. Now, I talked before, there is also concept. What is the concept? The business entity concept in accounting is also recognized as the economic entity concept, or the separate entity concept, if you all would like to say that. In the business entity concept, it is accepted that companies and their proprietors are two distinct entities for meeting the accounting practices objective. Now, would you all like to know the business of a concept? Now, that is a very interesting topic that we should talk about. The concept business is separate from its owner. The two must be dealt with as distinct entities when documenting transactions. All business transactions, like income, expenses, equity, assets, and liabilities, must be kept free from the owner's account to guarantee accurate accounting documents. The business entity concept suggests business owners must keep personal and business affairs independent. The meaning of business entity concept is to prevent business and personal expenditures from mixing up. Now, shall we talk about the business entity concept examples? This is an example, okay? You are the owner of a business and you take money from the business to reimburse for your kids' education. Such a withdrawal is not an expenditure for the business, as it is the use of money from the business to fund a personal expenditure. The transaction should be marked as a proprietor's drawings to imply that it is for the owner's private usage. We have first a separate taxation, second, measure business performance, third, auditing and compare companies, and then fourth, keep multiple business separate, and fifth is shareholders and stakeholders. Here we have types of separate entity. Now, I bet you all would love to know the types of separate entity. We have sole proprietorship. It is the only employee and owner of a business, but the business is still considered a separate entity from the proprietor. The proprietor is personally liable for the business, but business transactions can be taxed separately from personal transactions. And then, second type of separate entity is general partnership. General partnership must have some sort of agreement in place governing their partnership. General partnership do not confer any liability to partners. And then third, partners pay the taxes on their business as part of their personal tax returns. Now, next we are going to go the special purpose vehicles. This may be tough, but come on, bear with me, ladies and gentlemen. First is risk sharing, and then securitization, and then asset transfer and property sale. SPV is a subsidiary created by a parent company to isolate financial risk. Its legal status as a separate company makes its obligations secure even if the parent company goes bankrupt. And then here we have separate accounting records. Separate accounting records have first, which are cash deposit, bills, invoices, and third is transaction receipts, fourth is ledger, fifth is internal entries, and sixth is tax files. All prepare separate in financial statements. Prepare separate financial statements for investments, joint ventures, and associates. And that is a topic about separate accounting records. Now, our next topic is about going concern. This may be a bit tough, I know, but this is going to be very interesting for all of us to study. So do keep that in mind. Going concern is an accounting term for a company that is financially stable enough to meet its obligations and continue its business for the foreseeable future. Certain expenses and assets may be deferred in financial reports if a company is assumed to be a going concern. The concept is acceptability of the core product, margin, growth, and volumes, and cyclical revenue growth and profitability. Importance of going concern assumption in accounting is first, accurate financial statements, second is decision making, third is lending and credit worthiness, and fourth is case study, and fifth is tips for accountants. The going concern assumption assumes that the enterprise will continue to operate in the foreseeable future. Implications such as capital assets are recorded at cost instead of liquidation value. Amortization is used. Now, this is time to study again. I know this is tough, but bear with me, ladies and gentlemen. Now we're gonna go to and learn about going concern concept. Assumes a business will continue to trade for the foreseeable future. That's the first point. And then second point is allows costs and revenues to be allocated to future accounting periods. Third is it provides a more realistic value of business assets. And fourth is allows fixed assets to be written off proportionally over their useful life. We see the example of going concern. In other words, it assumes that the company can create revenue, pay its debts, and will not have to liquidate in the upcoming year. For example, a going concern accounting concept says that a business can be expected to continue its activities indefinitely. From an investor's perspective, the going concern assumption is critical because it helps them evaluate the entity's financial health. If the entity is not a going concern, the investor may lose their investment, and it is essential to be aware of such a possibility. From a lender's perspective, the going concern assumption is crucial because it helps them determine whether the entity can repay its debts. Lenders need to know if the entity can continue to operate and generate enough cash flows to pay back the loans. Now, time to study again, ladies and gentlemen. This is amazing. This was a truly beautiful studying session. I hope you all loved this video. I know this was hard, but I assure you, it is definitely going to be worth it once you study this. Thank you for watching this video. Please like and subscribe, and see you next time. Bye!